But you said you think we will have a small recession, as in it's
it
still
doesn't matter
on the
because
horizon?
the markets
Have
looking
priced that.
forwards.
The biggest lie that you and I were ever told in 2023 is that a recession is coming.
Everyone's like, I want my recession, I want my 50% sell-off in the S&P. You're not going to get it. You had the mild recession sell-off last year. That's what we're going to get.
The stock market is going higher. The crypto market, Bitcoin, is going higher.
I think the NASDAQ finishes this year at all-time highs. I think the S&P goes to all-time highs.
And in today's video, I want to share with you a series of clips from experts explaining why.
Every time there's a recession, there's a debate about this. Every single time.
Click the like button to support me, send this video to a friend. And for me, this all started when I watched a really great interview with global macro investor Raoul Powell on the overpriced JPEGs channel, explaining that this debate on recessions, meaning are we in one? Has it already happened? Is it coming? How do you define a recession? Is a debate as old as time? And Raoul has seen this over and over again.
How do you define, this seems like a silly question, but how do you define recession? Is it 2 quarters of negative GDP?
Well, that's what most of us think of, but it's actually driven by the NBER, and they've got a whole bunch of different parts of what drives a recession. But basically, if we see unemployment pick up from here, we're likely to have called all of the factors that the NBER have for recession. So we're very, very close. All of the indicators that I use suggest we're pretty much in negative growth now.
So we're pretty close. You're saying we're probably in a recession, or very close to being in one.
I put this on Twitter on the weekend. I said, how many of you have laid off staff, been in an industry where staff have been laid off? How many of you are seeing growth? I mean, it's obvious. I mean, it's obvious we're in a recession. I don't know anybody who's not laid off staff unless you're in healthcare or something like that.
So why does it feel different? Like, I don't know if it does not feel the same way that I feel like I felt in past recessions, which I felt much more obvious.
Because you are scarred by
2008.
Yeah, so don't forget, you were at school in 2001. Most people graduate or around graduating. School meaning, well, we use school in different terms, so high school. A lot of the millennial generation graduated around the financial crisis. Those were 2 big recessions. And then the pandemic.
Right.
So you've had 3 of them on trot, which were abnormal.
Right.
I actually graduated in 1990, and we had a recession then. The S&P was down 30%, 28%. It was very much like this one.
And it felt this way.
Just like this. It was miserable.
Were there debates then about whether or not we were? It feels like we have debates now about whether or not we're in a recession.
Every single time I've ever seen the yield curve invert, or every time there's a recession, there's a debate about this. Every single time.
And while I will share with you one more clip from this episode of Raoul's thoughts in Q4.
I think the S&P goes to all-time highs.
By the way, full podcast is linked down below, I recommend, as well as this is just 1 in 5 different videos I'm sharing with you today. But let's not forget, as explained actually in our video from a few days ago, several Bitcoin ETFs will get approved in 2023. And whether this does actually happen this year or next year, it could be in 2024. An ETF is happening. And Bitcoin today jumps over $30,000, at least flirting with it, as ETF hopes drive bulls. And in this second clip, Robert Kennedy Jr. explains that BlackRock and other global elites like this are trying to take over crypto before you, just like they've done with all other sectors.
Most of us know people who were about to buy a home. They were ready to do it, and at the last moment, somebody comes in with a cash offer and scoops it out from under them. We've all heard those stories. Why is that happening? BlackRock. There's 3 companies, BlackRock, Vanguard, and State Street. And those 3 companies, which all own each other, so it's really one huge behemoth, also own 88% of the S&P 500. And now they have a new target, which is to gain ownership of all the single-family residences in this country. And they are on a trajectory to do that if they can.
BlackRock today is allowed to buy property. They see that this is going to be valuable in the future and they're accumulating. They're not allowed yet to buy crypto, or at least they would prefer more regulatory clarity, like an approval of an ETF, spot Bitcoin ETF. And then BlackRock will be in a race with you to accumulate that too. And finally, let's look into where we are today with markets, with crypto. But let's remember what Raoul Powell said a few months ago on our channel, Best Cryptocurrency Investing Strategy into 2024. I asked Raoul about the upcoming Bitcoin halving. Is he still bullish? And he educated me on the business cycle and how these two line up.
So I think the Bitcoin halving is actually to do with the macro cycle. It's the debt refi cycle that happened in 2008. In 2008, we had a great reset of debt. What happened is every central bank, major central bank around the world said, right, nobody needs to pay interest. Interest rates are zero. Okay, that was fascinating. Then they kind of agreed that nobody was going to pay off debts. So they just keep rolling them. And what they did is back in 2008, they all issued debt between 3 and 5 years. That kind of 4-year midpoint is the halving cycle because Bitcoin launched at the same time. So they're coincidental. Now, maybe it's one of the reasons Bitcoin, can outperform because of it, but really the cycle is a macro cycle, which is really important for people to understand. But you can still use the Bitcoin halving cycle because it's the same timing. So it makes no difference. You don't have to over-intellectualize it. It's just like, yeah, generally 2024 should be an up year unless something dramatically has changed.
And in lead up to this final clip, because as you'll remember, Raoul says we're already in a recession, but Q4 could get a little choppy.
Q4 for me is the weaker period.
Oh.
That's when the recession comes in.
Jerome Powell, a few days ago, in a new public interview, while he admitted that the economy is showing signs of cracking, unemployment is starting to creep up. Powell said inflation is still too high and lower economic growth is likely needed.
Financial conditions have tightened significantly in recent months, and longer-term bond yields have been an important driving factor in this tightening. We remain attentive to these developments because persistent changes in financial conditions can have implications for the path of monetary policy. My colleagues and I remain resolute in our commitment to returning inflation to 2% over time. A range of uncertainties, both old ones and new ones, complicate our task of balancing the risk of tightening monetary policy too much against the risk of tightening too little. Doing too little could allow above-target inflation to become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. Doing too much could also do unnecessary harm to the economy. Given the uncertainties and risks, and given how far we've come, the committee is proceeding carefully.
So how all that affects you is that if everybody knows a recession is either happening or very, very likely to happen, I mean, every expert has been talking about this for the last 2 years. If everybody knows, then that's just everybody's buying opportunity if one happens at all.
We will have a mild recession. That was always my base case.
Okay.
But everyone was apocalyptical. It was
Yes.
2008 again.
Yes.
Everything's going down 50%, 60%. Obviously, crypto goes down a lot more.
Sure.
It goes down 80%. But generally speaking, I just wasn't that bearish.
Yes.
And the market had priced it in last year.
Yes.
Which was the big thing to me. It's like, when ETH bottomed in June, Bitcoin, the rest of the space bottomed in October, that was like, it's all priced in. We've got it all in.
But you said you think we will have a small recession, as in it's still
it doesn't matter
on the
because
horizon?
the markets
Have
looking
priced that in.
forwards.
It's very possible that 5 years from now, we'll look back and the government will tell us, well, we were already in a recession.
I think the NASDAQ finishes this year at all-time highs. I think the S&P goes
All-time
to
highs.
all-time highs. So Q4 for me
gonna be a run.
is the weaker period. That's when the recession comes in. So that's when we've already heard today, really, all the Fed were out saying, we've done enough. Bond market's gone too far. The bond market's overpricing this.
And either way, because markets are forward-looking, understand that the tightening, the hawkishness from the Fed is coming to an end, and we're already seeing liquidity come back into markets.
Things like Janet Yellen saying today, really interesting comment. She said, Well, when we think about it, financing the debt is going to be about 1% of GDP for the next 10 years. Well, if the government's 100% of GDP in debt, she's basically saying interest rates have to be 1%, which is part of this everything code thesis I've had. So what I'm seeing is liquidity starting to pick up. I think they will stop quantitative tightening this year. And then it's a bit complicated here, but the Treasury have been issuing new stuff. So that's the TGA bill, but that probably slows down. But the reverse repo, which is the other part of the liquidity stuff, start draining. And that probably pushes liquidity. If they take QT out, it just means liquidity rises.
Be sure to click subscribe for daily updates, keeping you informed about crypto. Like always, see you tomorrow.